Hello and welcome back to Coffee Infused Crypto. Hey Coffee, where have you been for the past 4 days? Well, just around, checking the markets, watching all the interesting news come out. But actually, there's no updates on the charts, so why we bother to actually even tap into the charts? And I'm gonna just show you what we have been talking about, and we're gonna go through all the charts combined and show you that everything's still in play. So there is nothing much more to add, but to stick to what we already had been discussing. Any dip in Bitcoin is yet another discounted buying opportunity. And what dips did we have? Well, this is the monthly chart. And before that, did you grab your cups of coffee? Go. Grab them, come back, and let's talk about charts. So, assumingly you paused, you grabbed your cups of coffee, and you're ready, we're gonna discuss this Bitcoin weekly chart, and we're gonna go through over 3 or 4 other charts, and then I will tell you my thoughts and reaffirm and reconfirm that everything is still in play. We haven't changed our strategy. So you all remember this chart, which we discussed earlier, right? We said the move from here on the daily, definitely we took this low on the daily, to the top from here, golden zone is where we should be at. This descending parallel channel or wedge or whatever, but I'm interested in the upper band, which is a descending resistance, which is acting as a resistance currently, needs to be broken, or else we would be trading between our golden zone and the descending resistance. That is forming a triangle. And we have 2 more buffers, right? That is clearly what we said. First buffer is this red box or orange box, which is on the weekly. If we switch on our moving averages, we notice it's the 200 weekly moving average right on the 0.65 on this level, and the 20-week moving average, creating this box with those bottomed wicks here. So that's how we had this box. It's backed up by 2 very important weekly averages. So we said, we go, this is the first support buffer, and the second support buffer is the peak of our swing high at $25,341. And guess what? Peak of our 21,000, magnet in the way. There you go. Let's do that again. And again. All right, weekly is stubborn. So you got my point. That is where we wicked. I mean, not exactly. I'm not gonna lie to you and say to the dollar. I'm just gonna say that we went down and came all the way down to 25,353,000 instead of 25,320,000 on this chart. So what has changed? See this magnitude of a wick, this magnum wick? That means buyers were ready between this area, they bought the price back up into our golden zone. So nothing changed. We're still trading within our triangle. So that is one chart. Our swing high supported us, red box supported us, golden zone we are still in currently, and this is acting as a resistance. So that is the one we need to take. So That is one. If we flip to the daily and bring up the oscillators, let's check on the daily. So guys, to look at the perspectives of things on the daily, on the weekly, let's go on the weekly, and let me show you that on the weekly we are currently minus 1.78% on the weekly. So minus 1.8, right, percent on the weekly. What did we have this week? The SEC, the nuclear margin attack, the extraterrestrials conquering Earth, and all the FUD in the world has orchestrated, by the way, has just jumped straight on attacking cryptocurrencies. And Bitcoin actually said, I don't care. Minus 1.79%. So what would come more, right? So we've been here a while now, and we've seen how Bitcoin would react to certain situations. And what I conclude for a weekly action is some resilience and some, holding grounds. This is impressive. By now, on any other day, we would have been breaking the swing high. We would have been taking this 24,125 flow, and we would have been in another different dimension, and I would have been posting more videos about it, because then we would be in a different bracket and we need to update our strategies. This is quite impressive. Look at it from a macro vision. This is quite impressive. The market is choppy. If you want to go down to the micro levels and be, try to take advantage of those 15 to 1 hour charts, you will get tracked. Not in the first trade, the second trade, not in the second trade, the third trade. In current situations, you take advantage of the dips from a macro level, you reinvest in your bags, or you let go of some and jump into another. That is depending on the strategies that you are following based on the market updates. But in current situations, we accumulate more. That's that. Another chart. Remember this one. This one we can go down on the daily and check. Yeah, because I have those. Let me check first on the daily on Bitcoin if we touched. We didn't even come back down to touch the oversold levels as in here. Yes, we broke to the upside. Yes, we came back and kind of retest and rebound off of it. So that's good on the daily. So, but we never even touched the, the oversold levels on the daily, which we were expecting or wanted to happen, which never happened. That's also good. So this other chart, which you remember, what happened? Actually nothing. This also tells us something. This wick, remember this orange box based on this wick low from Luna's crash, I suppose. We had this zone of buffer, which again, we were trading in this descending parallel channel back from the all-time high. You know this chart, we talked about it. Look at this, guys. If you just believe in your macro charts, you know exactly when or what to do at what areas to do them. If you had this chart and you were playing this chart and the previous one, you would exactly, if you had some buy-in orders previously on this, which is acting, look at this. This can't get any more beautiful on the weekly. So we had a resistance at the base of this box here, right? We got resisted. Another resistance at the base of this box here, broke to the upside. We are resisted at around this area, came back, retested. Here we didn't touch, here we didn't touch, here we perfectly touched and rebounds so far. So far this is a beautiful retest. And to add some things into perspective as well, this can be played around this area. Like this would be our resistance from the top side, and we can grab some falling wedge around this area, and again we can have some head and shoulders pattern on the weekly, which you are most probably seeing a lot currently. With this would be our left shoulder, this would be our base neckline, this would be our head, and then this would be our right shoulder, and I'll adjust that in a second. So forgive me, this is a bit choppy, but yeah, I mean, this would be our inverse head and shoulders. We can bring this to this area and again do this around this area like so. So that would be our inverse head and shoulders everyone's talking about, which broke to the upside, went into a descending broadening wedge, came back, retested the neck successfully, and the move from this area, let me turn on the magnet, let me go here, let me take a price range, go from here, the very low to this. So that move from this area after the breakout would be technical move at 41,330, but definitely we don't go in a straight line. So we come back, we retest, and now if we break this move is still valid. But first, what do? Here we are in this descending broadening wedge. So again, this is choppy a bit, but that's how you think. You take the lowest from this broadening wedge all the way to, of course, you turn off the magnet to the highest, to this neckline. You bring this up, put it on where we break out from here. So this would be our first target, approximately 32,600, which is a new high, which if this flips in this direction, this is attainable, this target from this bigger inverse head and shoulders. But again, we take things one step at a time. First step was breaking this inverse head and shoulders. Second step is retesting. Still one candle, amazing wick, but we have to wait for the next week and see if we come back again for a second retest. If this holds, then this is bullish because we will fly off this area with a momentum, and this is narrowing down on us. So we have a descending triangle. That's how you look at things from a macro perspective. And what more bearish news can come? Just tell me. I mean, other than this, what major pressure can come on the markets? Binance, Coinbase, SEC, you name it, FDIC, you name it. So the things that might affect our price, remember the China ban, which was impactful the first time, the second time, the third time, and like the 19,000th time did actually nothing. And remember where we were when the first time happened and where we are today. So go back to history, it will show you the path. That's it. This is the second chart. This is the inverse head and shoulders if you want to look at it this way. But this chart, descending parallel channel, orange box, we just retested the neckline if you want, or the previous support resistance, which we broke at this candle. Third chart, parallel channels. You remember this one as well. We talked about it ever since we were around this area, and we followed up with this, double parallel channels. We lost the first one, came back down, wicked below the second one, and got eaten up on the weekly, and we are currently above the base of the second parallel channel. This structure, the two parallel channels, still intact. We didn't close a week below the second parallel channel, by the way, which we wicked around this area as well. And this is the descending broadening wedge that we were talking about. This is an advanced parallel channel, which I just put on the daily because we always update our structures. So we're gonna go down to the daily and we're gonna discuss a little bit daily price action. So notice this, guys. This is something I want you to focus on, the low from this area, the wick to this area, which supported us. So, right? And again, no, not this. Again, we move this here and try to avoid those lines. I'm going to explain them. Just focus on the purple parallel channel. Again, a perfect wick to the lowest part, which we got higher, right? So we got eaten up and we bounced right from there. So this parallel channel, look at it. Okay, so it's ascending, and I thought it will make sense even though we have overhangs on the upside, if you can see here. But that makes sense because first, charts are not perfect. Second, I have influence points at around this area acting as a resistance, and I have those lines would act as a support, and I have another mid here interaction, lower interaction. I have a wick to the upside at around this area, support at around this area, support at around this area, and resisted at around this area, and we got broken to the downside. So this makes a lot of sense, right? And those are overhangs to the upside, overshoots to the upside, and we came back down trading in this descending wedge, which we discussed earlier. So descending wedge, what do we have? What lines do we have here? So first of all, I have the last week's Monday's low, which was at 27,529, and we have this week's Monday's low at 25,399. Okay, and we're trading between last week's Monday's low, this week's Monday's low. We're gonna check what Monday low do we have the upcoming Monday. I always tend to look at my Monday's low, because if in 2 or 3 days we didn't take out the Monday's low, the previous, we expect to stay below Monday's low. It's a bearish weekly sign. Okay, so here Monday's low was here at this candle, and this is how the market reacted, by the way. This is very, very bullish. So we are currently trading above our Monday's low, and since Monday, I know when Tuesday came that we're gonna be above our Monday's low for the next coming week. So those two green lines are Monday's low, the last two Mondays. Okay, and then we have the red one is the 200 weekly moving average on the daily. I love to always keep track on how we are flirting with the 200, and the 20 weekly moving average. That doesn't get any more perfect than this. We are supported by the most powerful moving averages. Losing those, we're gonna be in a bad spot, but losing those should be closed on the weekly, not on the daily. Keep that in mind. So that's that. Again, this is our current support, this broadening wedge. We don't want to lose the 200 and the 100. So the swing high on the orange here from the previous swing high, 25,300 or 253. Lose that and we lost everything above it. Okay, so this is our final, support, and the most important one. We can definitely at any given time, because the market can be a bitch sometimes and manipulated, so we can lose it, grab liquidity from below, stop our long-term longs and then go back up. That can happen, as much as this can happen, breaking to the upside of this wedge and then stopping the shorts and then going back down to the other direction. So these types of manipulations always happen, so be careful. That's why don't get chopped, build your strategies. We are on the we're mid-year, so less than a year, 9 months approximately for the Bitcoin halving. How do you think the market will trend? How lower can we go before we start trending upward? And what are you doing today to be positioned correctly in the market? Remember, big moves come after huge FUDs. All right, I'm gonna leave it at that. I hope you enjoyed your coffee. Stay safe, stay resilient, look macro, stay smart, and always look a couple of weeks to a couple of months ahead of you. With that being said, I want to wish you a happy day. Enjoy it, go out, touch grass, don't drown in this mud of the 15-minute chart action. You will wreck yourself. That is everything. See you tomorrow. Bye-bye.